In 2017, I made two major decisions that changed my life. The first one, I quit my job at the bank and I started working full-time at Dividend Stocks Rock. The second one is I received my pension plan amount, which was $108,000, and then I decided to invest it all at a all-time high market. So here's what it looked like back in 2017. So I was looking at 10 years of almost consecutive hitting new high on both the US and the Canadian market. The Heidenberg Omen, so a set of technical analysis that were just all put together telling us that the crash was coming. The headlines back then in 2017, the market's overvalued. It's like greatly overvalued, 30, 40%, chances of another big crash or a bear market. And yet, I received my check in September of 2017, decided to invest it all. Took me about 3 months, but after the first month, back in October of 2017, I was already 75% invested in equities. By the end of the year, I was fully invested and running full speed ahead. And today, I'm going to share with you what happened with that and going forward, what my portfolio looks like today. But of course, it was at a all-time high and I could have waited. And for those who have not seen my webinar, I did a webinar last week about investing in a all-time high market because again today we are in that situation. So you can look at the link description below, dividendstocksrock.com/replay. You're going to get directly to the replay and I'm giving you tips, actually 4 tips plus a bonus strategy to invest at the all-time high market like we are right now. So back in 2017, if I had waited and say, oh, I'm gonna stay in cash because all indicators are pointing towards a bear market or a correction at the very least, and then I'm gonna deploy that dry powder at the bottom of the market and I'm gonna be a hero. Well, what would have really happened is I would have been forced to wake up after Christmas on December 26th and then start buying everything that I had on my buy list because the market bottom was on December 26th. At that time, I was celebrating. I was during the holidays. I was not looking at that. And if I had waited only to start investing mid-January or in February, I would have lost all the easy money and I would have lost all the dividend payments between 2017 and 2019. Then COVID happened. So of course I could have invested at that time because it would have been a little bit better than when I invested my money. However, during that period, at no time I saw my portfolio value going under $108,000. It was always above, even during March of 2020. And between you and me, I'm not too sure if I would have been sitting with $100,000 in my bank account for all that time that I would be willing in the middle of March of 2020 to invest it all and think that it would be a V recovery super fast, right? And even worse, if I would have wasted for the small correction of 2022, I would have bought stocks at a much higher price than I did in 2017. However, being fully invested in stocks is not always that easy and it's not that smooth of a ride. So what you can see here is the pension dividend income. So I was tracking every month for the past 6 years how much I receive every single month. And as you can see, sometimes it's good, sometimes it's bad, from one year to another, from one month to another when you make trades. So it's not that easy to create a steady flow of income. And even worse than that, I made a lot of mistakes. I'm probably famously known about Sylogist because Sylogist was a small cap company and not many people talk about it. So I lost money on Sylogist, I lost money on Andrew Peller, Lasson Industries, VF Corporation, and Algonquin. All of those companies cut their dividend besides Andrew Peller, and on all of those companies, I lost money, roughly between 40 to 50% every single time. That's kind of crazy, right? So I made a lot of mistakes in that portfolio over the past 6-7 years, and yet my portfolio income has grown up by 70%. So remember the graph I just showed you where like each month I was tracking everything? Well, it's a lot smoother when you look at the past 12 months growing most of the time every single month. So it's a lot easier, and then you see that the dividend kept increasing. So what's the secret here? So I made a bunch of mistakes, I invested at a all-time high market, and yet the portfolio income continued to grow. So you may think, oh, but Mike, you just added capital and that solved the problem. Well, no, because it was a locked-in account. So when you receive the money from your pension account, it means to be invested for a pension purpose. So I cannot add capital, and I could only use the dividend I received from those investments or the profit when I was selling shares. So no new capital added in this one. The secret was found in picking a lot of great companies along the way. So while I did a few mistakes, I did a lot better picking as well. And the methodology that I've used is to focus on companies with a strong dividend triangle. A good example here would be automatic data processing, ADP, trading on the US stock exchange, where you can see that the revenue continues to grow all the time, the earnings follow, and the dividend as well. So in other words, I'm looking for businesses that find ways to grow their business, increase their sales. It could be through acquisition, it could be by getting market shares, product innovation, anything that could work as long as sales are growing. When sales are growing, the second thing I'm looking for is a company that maintains their margin and has some strong pricing power. In other words, a business that grows their sales and grows their earnings along the way. So in this case, what you can see at AP is every single time that the revenues are increasing, the profit follows pretty much at the same pace, which is amazing because then you have a thriving business making more sales, making more profit. And what's the next step? Well, how about sharing the wealth with shareholders? So the increase is also another sign that management is confident that the company has a robust balance sheet in most cases, and that the company is able to grow their business and grow your revenue at the same time. So while focusing on the dividend triangle is not perfect, and I made some mistakes in the past, still overall the portfolio has grown up at a very nice level. I show a compounded total return of more than 13% per year since the beginning, with half of that money invested on the Canadian market and the other half on the US market. I mention that because it's really important, since the US market pretty much compounded at like the same rate at 13%, but not the Canadian one. Today, my balance of my account is nearly $250,000, depending on the days, obviously, but I'm getting close to $250,000, which is kind of great because I didn't add any dollars to this one. The annual income is now a little bit more than $5,000, and the average growth rate across the companies I own is almost at 10%, which means that next year I can expect to receive $5,500, $5,600, and it will continue to compound that way. As you can see, this portfolio is well balanced across many sector allocation. It has very strong ratings, and this dashboard is coming from my membership website, dividendstocksrock.com. This is the pro subscription that is offering you this great dashboard where you can see your dividend diversification, the dividend forecast, and also your income calendar. So it is a low yield, high growth type of portfolio. The yield right now is around 2%, so not crazy either, but focusing on quality company will not only increase the income at a very fast pace, but will provide a great source of total return. Obviously, those are not buy and sell advice. Maybe it's going to go wrong later on. I don't know. But so far, I'm very happy with what I've done. And I just wanted to show you how focusing to a strategy that works for you for a long time, no matter what happens, no matter if you invest at a all-time high, is still a good strategy. It's going to work, and the best thing you could do is to stick to what you believe in. So if you're curious about the tricks that I've used back then in 2017 to build that portfolio and invest in a all-time high market, link description below, dividendstocksrock.com/replay. There's a full webinar there sharing my 4 tricks plus a bonus strategy to invest today without losing your conviction. All right, I hope that you have enjoyed this video. Give me a thumbs up, subscribe to the channel to not miss my next video on next Thursday. And until then, don't forget to stay invested.